Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 27th of April. All right, now, no major changes in the news, just a bit of bleak outlook for a lot of economies. We do have the BOJ meetings today. We've also got the Fed and the ECB later in the week, so a few central banks to come out with. The news is, or the focus has gone away from the fear of the coronavirus and all the deaths and all that sort of stuff. Looks like we've gone through the peak there. Now it's sort of focusing on the rollout back the other way. Now, there's a huge disparity between a number of the US states. That's going to be a contentious point going forward, obviously, and the news services will really drill you on that. But when we start to talk about lockdown, we're starting to talk about, okay, the fear is over. I think that's going to see the US dollar roll back the other way. Now, the US dollar is a bit of a safe haven. And the CFTC numbers are showing that speculators out there are all pretty much thinking the same way, right? Weak dollar. Looks like the virus, we're through the worst of it. The safe haven trade is over, so to speak. And that's the dollar. That means sell US dollars. And we're starting to see this across the board as we go through the start of the Asian session. Now, just having a look here at the... I'm going to get my pen up here. The dollar pairs. Now, this is just come into line, right? So we've been through, I mean, the Asian session's been going for 5 or 6 hours at least. We are starting to see the dollar drop, or slightly drop. It's hardly moved, but it's going up against the euro, sterling, Aussie, and Kiwi. Now, the Kiwi and sterling have already popped to the top side. Dollar Swiss is the odd one out of this little pact. But what you'll see here on the charts is a pretty clear picture. Now, it's the dollar weakness situation is in play now. The Kiwi has sort of just popped the top side. This looks like a really meager stop loss run, whereas sterling was a really good clean out, right? It's rallied 50 odd points. It's now back in the middle of the range there. It leaves the Aussie and euro for a chance to sort of catch up maybe later today or in that European session. I'll be keeping a close eye on it. I do like the idea of the euro popping up towards 109.20. Looks like the market's short euro, and it's one of those pairs that's just been, you get into the short-term trend for a short while, and then it comes back and bites you, and I think it's ready to do that. Dollar CAD, well, trading back in the middle of the range here after a pretty traumatic week for oil futures prices. I don't think that oil situation is over just yet, so we may see dollar CAD higher, but for the moment it's sitting nicely in between a support and resistance trend line, and dollar yen pretty much just gyrating sideways. We may get something out of the yen as the BOJ meet today. They are expected to roll out more stimulus. Okay, I don't know if they've got any money left, but they've been trying to get this thing going for about 30 odd years. I don't know why the coronavirus is anything different for them. As in the stimulus package, they've got to change the structure of their economy. That's the unfortunate thing. And that's not going to really happen any day soon. Now, let me just bring you back to the daily trade routine, just to give you a bit of a look through where we see what's happening. The normal Monday liquidity, okay, there is sort of low volatility, although things did start moving. Now, the market driver, well, it's still the US equity and bond markets, but you know what? It's almost like the end of the coronavirus story, or the flip over of the lockdown, letting people out. That could create, as I said, that dollar weakness across the board. And as the CFTC numbers show, this is a real thing, right? So coming back into the active pairs at the moment, well, I still like the idea of oil down, even though momentum is up. Looking to get into a false break once that breaks above 1875. Another trade at the moment, I think Euro's had a very clear trend in play, and it's been down. So I like the idea with an up momentum to buy a break and look for that trade. Now, the Aussie has a very similar setup, right? But it's just been trading sideways. So it doesn't have that really raw nerve of a huge amount of stop losses on the other side. I still like the idea of a buy a break on Aussie. I'll show you the charts there. I already showed you those. Aussie and sterling and Kiwi have already popped to the top side, but that's going to be the run of it for the moment, I can see. So that's where we are on the major pairs. Now, I think today's best pick. Now, this is different to last week, where the news wasn't as clear as in rolling back out of all the coronavirus bad news, and it's getting into potential, reversing the lockdowns and all that sort of stuff. So now that's where the dollar trade has just popped its head up in the last few days, and really seems to be prevalent. So even though the trend is down, I can see this thing cruising back to the top side very quickly. Maybe it's just a stop loss run, but there's going to be some cash in that. Keep an eye on the data this week as well. Obviously, as I mentioned, we've got there's no major news out today, but we've got a bunch of US numbers coming out: advanced GDP, consumer confidence, and then you get into the Fed. And a key number for the Aussie is going to be the CPI numbers come Wednesday as well. All right. Then you got later in the week, you got the ECB. And that's going to be a pretty important number, as is the see how those jobless claims, those weekly jobless claims numbers out of the US. But we're going to see what the ECB come up with. I mean, there's still a lot of talk about these central banks piling in more stimulus. Well, it seems like they've already done the job, and we're coming out of not coming out of it, but we're through the worst of the whole fear stage of the coronavirus. So to me, it's like throwing good money after bad, but we'll have to see how it plays out. The fundamentals, the macroeconomic fundamentals, are not really dominating like they usually would. It's still all about the virus and this, that, and the other, but keep an eye on the dollar. If this news doesn't get worse, or there is no increase in casualties, etc., then I think we're going to see the dollar fall, and that could see us all retrace lower. Now, just to finish up, if you have a look at the dollar index here, it's just breaking down. So if you've got access to this, it's probably not a bad idea to be getting short the dollar index, and that to me suggests euro should be going higher. Of course, sterling is already higher. It's the way to go, and dollar one is sort of almost mimicking the dollar index for the moment. All right, guys, that's it from me. The equity market's up 1% on Friday, so no major lead into today's trading. As I said, the looks pretty clear at the moment, all bar the Swiss. Most of these pairs going up and the dollar looking to go down. I think that's the way of it this week. All right, guys, have a good one. Cheerio.